Good morning, welcome to the Morning Outlook by Kalkine TV. I'm Sage. The US and most global markets fell on Friday as the world waits to see how high the oil and wheat prices will go amidst the conflict in Ukraine as Russia continues its invasion. Despite a positive US jobs data, which saw a significant increase of jobs, the S&P 500 fell 0.8%. The Dow Jones Industrial Average fell 0.5% and the Nasdaq Composite ended 1.7% lower. And what the US market is calling super backwardation, with the oil spot or cash price being higher than the forward price, seems to be offering the commodity-heavy Australian market some leverage, with the market set to open flat today. The Australian market has seen significant growth in the December quarter, and the GDP grew by a historic 3.4%, the strongest gain since March of 1976. And this, coupled with a 28-point rise in the futures, or increase by 0.4%, is what was witnessed on Saturday and indicative of the expected open this morning being flat. Despite this, Australian wages were weaker in February, which doesn't paint the rosiest picture considering the inflation levels we are experiencing. The Reserve Bank also wants to see the economy growing fast enough to raise the jobless rate to be below 4%. In the US, banks fell by 3.4% in response to lower bond yields, and the energy sector rose 2.9% on the soaring oil price. With the hawkish outlook from the Federal Reserve, investors looked to the safe haven bonds on Friday as the fighting escalates in Ukraine. And the 10-year Treasury yield fell to about 1.78%, this having an inverse relationship to its price. The 10-year yield on Wednesday saw its biggest one-session jump since March 2020, and over the week the US 10-year yields fell by 23 points and the US 2-year yields fell by 8 points. The Fed is expected to raise rates for the first time since 2018, and the European share markets witnessed a fall on Friday. The market sentiment is in extreme fear, with the news that Russian forces had set ablaze a nuclear power plant in Ukraine, and this being the largest in Europe. The European banks and car makers were down 7.9% and 5.6% respectively. The Pan-European stoxx 600 index fell by 3.6%. This marks the biggest slump in 2 years, being down 7% over the week, and the German DAX index lost 4.4%, with the UK FTSE index down by 3.5%. Shares in Rio Tinto fell by 1.6%, with shares in BHP down by 0.9% on the London Stock Exchange as well. And the global oil prices continued to rise sharply on Friday, correlating to rising demand. With many major oil players pulling out of Russia, investors are anticipating the devastating impact of direct economic sanctions on Russia's energy sector. The International Energy Agency met last week to discuss releasing oil from their emergency reserves, of which they hold 1.5 million barrels. Russia exports 4 million to 5 million barrels of oil daily and is the world's second largest oil exporter. As investors also await an agreement between the US and Iran in the nuclear deal, which could alleviate pressure by adding 1 million barrels per day of oil to the global supply. The Brent crude price rose by $7.65 US a barrel, or 6.9%, to a 9-year high of $118 11 cents a barrel. And the US NYMEX crude price rose by $8 US 1 cent, or 7.4%, to $115 68 cents a barrel, the highest level since September of 2008. And over the week, the Brent rose by $20.18 US, or 20.6%, and NYMEX crude rose by $24 and 9 cents, or 26.3%. And the gold futures price rose by $30.70, or 1.6%, to US $1,966.60 an ounce, and spot gold was trading near $1,968 an ounce in the US trade. Over the week, gold rose by $79 an ounce, or 4.2%. And iron ore rose by 60 cents, or 0.4%, to reach US $152.40 a tonne. The smaller company stocks also fell. The Russell 2000 index dropped 31.51 points, or 1.6%, to 2000.90. And in the Asian market, Japan Nikkei index was 225 was down 2.23%, and Hong Kong's Hang Seng is down 2.5%, with the oil prices soaring. Benchmark US crude oil price closed above $115 a barrel Friday, rising 26% for the week. And the high gas prices are making electric vehicles more attractive than traditional petrol-powered vehicles. And this has seen Tesla's stock close up 3.5% in the past week as oil soared and the rest of the market slumped. The Friday pre-open in the US saw gains in the retail sector, with Gap shares surging 7%, and the AGL Energy Limited has rejected a revised takeover proposal from Atlassian's Corp, led by the consortium managed by Brookfield Asset Management and Grok Ventures, saying the offer had undervalued the power generator and retailer. And this is after Atlassian Corp PLC co-founder Mike Cannon-Brookes had increased its proposal to $8.25 Australian, or US $6.08 a share, up from $7.50 Australian per share. The oil players such as Santos and Woodside could be on the investor watch list for today. Thanks for joining us on this report, and keep watching Kalkine TV for more market insights and expert talks. Sage signing off for now.